Hey everyone, in this installment of Q&A with Wall Street, I'm going to look at AMD and conduct a analysis of its latest question and answer session with Wall Street. So let's jump right in. Let's take a look at this session.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the first question comes from Wells Fargo Securities, and they ask if they can get more information on a relative basis, the 400 million in data center GPU revenue that AMD was expecting in the fourth quarter of 2023. And AMD CEO Lisa Su jumps in to answer the question saying, look, we saw the M1 300X, the AI product, actually exceed our expectations based on the strong customer demand. And, I've been talking about this at length. I should say almost every AI company or AI related company I've been looking at the last 3, 6, 9 months continues to report that demand is coming in better than expected. Demand from their clients are coming in better than expected. And we see this again here with AMD saying that the demand for this AI product exceeded their expectations and exceeded their outlook. And the CEO saying, I think the key piece of it is we had originally expected the ramp to be a little bit more slow and more shallow for their MI300X. And what we're seeing now is the supply chain is operating really well and the customer demand is strong. And so we will see MI300X increase as we go into the first quarter, and things are going relatively well. So great news there for AMD stock investors and those interested in AMD. It looks like demand for their newest AI product is strong. And I've been saying that their prospects are good because, for one, NVIDIA has such strong market share in this area that clients are looking for diversification. They're looking to give another supplier a chance because they don't like when one supplier like NVIDIA holds such a strong market share. So they want to diversify away from that. So even if AMD's MI300X product is not as good as NVIDIA's, clients want to give it a chance. They want to give it a piece of their business because they want to diversify away from NVIDIA. It's too much risk relying on one single supplier, and it gives them too much pricing power because they'll know that they are the only available offering in the market and they can increase prices and you'll have to pay because you have no one else to go to. But if you give AMD some business and AMD uses that business to increase their scale and then iterate and get better, therefore you'll have another offering in the marketplace. Even if it's not the best, you'll have another option. If NVIDIA prices you too high, you can go with them. Or if NVIDIA has some shortage, you can go with AMD. So AMD is going to get an opportunity. They're going to get an opportunity here to take significant share of this AI GPU market where NVIDIA right now dominates. It's at least arguably, some say one, some say two, some say three steps ahead of the competition. Still, AMD is going to get its shot. And here you see the CEO talking about how strong customer demand is, and I'm not surprised. I've been saying this for 3, 6, 9 months now, that other GPU makers are going to get a shot because NVIDIA has too much market share, and these clients, these enterprises and institutions are going to want to diversify away from NVIDIA. They don't want to rely just on NVIDIA for these very critical components now for their business, developing AI in their business. And then the CFO jumps in to add, saying that we think in the first quarter, it will have a low double-digit sequential decline, the embedded segment. On the gaming side, Lisa mentioned during her prepared remarks is that it's the late stage of the product cycle in the 5-year of gaming consoles. So the latest generation gaming consoles are getting long in the tooth now. It's now the 5th year, and consumers are not rushing out to get those. If they're on the fence, they're waiting for the next generation to come out. And so the demand in that area is weak, and they expect the first quarter gaming segment sequential decline probably more than 30%. So the gaming segment is not doing well for AMD or others, to be frank. All right, so Wells Fargo wants to ask a follow-up question asking about non-AI general purpose server market in 2024. So these are all things non-AI related. They understand AI is hot and AI is going to grow, but what about everything non-AI? And so the CEO jumps on again and saying, going into 2024, I would say the traditional server market is still mixed, especially around the first half of the year. There's still some cloud optimization going on, as well as sort of enterprises being a little bit cautious. And we saw this start to happen, if you remember, in late 2022 is when this first started. After the Federal Reserve increased interest rates quickly and rapidly, businesses started to worry. They thought demand is going to decrease. They thought there was going to be an economic recession. So they pulled back spending significantly. They pulled back spending on areas anywhere they could find that they could decrease spending. And one of those areas was the cloud area. And you saw that cloud optimization just means that businesses were reducing their spending in the cloud. They were finding ways to reduce spending in the cloud. And so that hurt AMD and others, and it's continuing. Businesses haven't really ramped up and said, oh, good, thank goodness there's no recession. We can go ahead and go all out now. That hasn't been the case. Enterprises have still been cautious on nearly every aspect except AI. AI is where there's been aggressive investment and aggressive spending. But you've seen in other areas, you've seen almost, most of the companies that I report on are looking to cut costs, some of them meaningfully by billions of dollars, some of them announcing tens of thousands of job cuts. And still, it's cautious. It's a cautious environment for enterprises. And you're seeing AMD say that for at least the first half of the year in 2024, it's going to remain a cautious environment. That being said, the CEO sees opportunities for them to grow and take market share. Even though the overall market in the cloud is declining and mixed, they feel they can take market share because their portfolio is extremely strong. So even in a mixed demand environment, they're bullish on what their traditional server CPUs can do in 2024. So that's good news. Amid a difficult backdrop, AMD feels like they can take market share. All right, so the next question comes from UBS Investment Bank. They're talking about the milestone for AMD in taking its share of the $400 billion total addressable market that they have for 2027. And is it reasonable to assume that AMD can take a 20% market share in GPUs? 20%. NVIDIA has much more than that. So they're wondering if AMD can sort of close the gap and at least gain 20% market share. And the CEO jumping in to say that I think the beauty of the AI market here is that it's growing so quickly that I think we have both the market dynamic as well as our ability to gain share in that framework. So, in other words, two ways AMD is going to grow. Number one, the market is growing so fast that they're just going to ride that tailwind higher. And number two, they're going to gain share. They feel like they're going to gain share. So they're excited about the ramp of the MI300, and frankly, there's a lot to do in 2024. They're excited about the opportunities for the next few years for 25, 26, and 27. So we see a lot of growth, but I think it's a little early to make market share projections. Interesting. So the CEO doesn't feel comfortable saying yes or no to that market share projection, choosing to sidestep that question instead and just say, look, the market's growing, we're going to grow because the market's going to grow, and we're going to take some market share. So not telling investors or this analyst anything in detail about the target that they're going for in terms of market share in this area, but also giving investors that guidance, letting them know that, the market's going to grow. So that's going to lift us higher. And then on top of that, we are going to gain market share. And it's for those dynamics I mentioned earlier. This CEO knows that enterprises are going to give AMD opportunity because they don't want to rely solely on NVIDIA. So AMD is going to take market share. That seems almost inevitable just because of the risk factors of giving NVIDIA so much market share from all of the enterprises. So it's going to have an opportunity. Now it just needs to fulfill that opportunity. It doesn't need to hit a home run on this opportunity. It just needs to get a single. It just needs to get on base. It just needs to do a solid job meeting this opportunity, and it's going to be given another opportunity even after that, because even still, they're way behind NVIDIA in terms of market share. So even if they gain a little bit of market share, even if they gain up to 20%, which they're not there yet, even if they gain up to 20%, they're still going to have more opportunity because there's a wide market available. NVIDIA still has too much market share in terms of the other side, the other perspective. The people that are buying NVIDIA's GPUs are not comfortable with NVIDIA having so much market share. So they're going to give AMD more help. They're going to give AMD more opportunity so that they can balance out NVIDIA and take away some of their pricing power. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.